Hello and welcome to Angel Insights, brought to you by SyndicateRoom. And today is an incredibly unique show as we welcome our first doctor to the hot seat, in the form of Dr. Alicia Robb, a senior fellow with the Kauffman Foundation. She's also a visiting scholar to the University of California and the University of Colorado. She is the founder and past executive director of the Foundation for Sustainable Development, an international development organization working in Latin America, Africa, and India. She's also a prolific author on the topic of entrepreneurship. In addition to numerous journal articles and book chapters, she's the co-author of Race and Entrepreneurial Success, published by MIT Press, and A Rising Tide, Financing Strategies for Women-Owned Businesses, published by Stanford University Press. She also serves on the board of the National Advisory Council for Minority Business Enterprise, the Advisory Board for Global Entrepreneurship Week, and is a guest contributor to outlets such as the Huffington Post and Forbes. Therefore, it is with great pleasure that I introduce to you Dr. Alicia Robb. Alicia, it's absolutely fantastic to have you on Angel Insights.
Great to be here. Thanks for having me.
Now, I'd love to start off by hearing, how did you get into investing?
Well, I was actually writing this book. So I'm a senior fellow with the Kauffman Foundation, and the Kauffman Foundation's, the largest foundation in the world dedicated to entrepreneurship. So I work in research and policy, and I do a lot of research around entrepreneurial finance. And I was writing this book about financing strategies for women-led companies. And in doing the research and learning more about angel investing and venture capital and crowdfunding, I just started lending through some online platforms, Prosper and Lending Club. And then when the equity crowdfunding platforms started popping up, I started making some small investments on WeFunder and looking at AngelList, and ended up joining a syndicate on AngelList and doing some investing that way. So that kind of got me into angel investing in small amounts before actually making larger investments in individual companies offline.
And then our first question comes from a friend of both of ours, Elizabeth Krause, who is also on the show. And she asks that, as a female investor yourself, what's your biggest challenge in recruiting other women to invest? And how do you plan to challenge this?
It's a great question. Elizabeth and I talk often about that. I'm actually an investor in Merge Lane because there's also, a huge gap in gender gap in high growth entrepreneurship. So we need both women and entrepreneurs, and we need more women investors. And I think that there's a positive feedback loop there. I think we're going to get more capital to women if we have more women investors, and I think the more successful women entrepreneurs we have, the more women investors we're going to get from that pool. How am I dealing with that? Well, that's a great question because a big chunk of my time right now is actually dedicated to that. I mentioned the first book I was writing called The Rising Tide, which focused on financing strategies for women-led companies. It was published by Stanford a few years ago, and they came back to us and said, hey, can you write another book just on high-growth women's entrepreneurship? And we said, yeah, but only if we can also focus on the gender gap on the investor side. And they said, sure. And so we got writing, and we just finished the draft of that this year. And what came out of that was, why don't we have more women investors? And there's several reasons. One, women aren't aware of the opportunity. It's not like men are either. As far as, at least in the U.S., you have to be an accredited investor, which has, income or wealth requirements. Only a tiny percentage of people that are actually eligible to be an angel investor actually do so. So it's not like everybody's jumping into the game. There's a lot of people out there that could be angels that aren't. But on the gender gap side, so often when Elizabeth and I are at investor meetings, we are the only women in the room. And often we're in different rooms because she does a lot more impact investing. So a lot of women don't know other angels, so they don't come about learning about angel investors from their networks. So one, they don't know about it. Two, they don't know other angels. Three, they don't really see investment opportunities. Four, they're risk averse and to make a large first investment when they don't really know how to do it. And then five, They want to know how to do it and be competent in doing that. So bringing all that together, I actually designed a new program named on my first book, the Rising Tide program, which is actually bringing together 99 women angel investors, 9 experienced angels and 90 new and emerging angels. And the 9 are actually going to mentor the 90 over the course of a year. So everybody puts in $10,000. We have $1 million fund, and we're going to make 6 to 8 investments over the next 12 months. But the idea is the women will, one, be mentored. They'll also get trained and educated through a variety of different materials and online podcasts, etc. And then the 9 lead angels are going to be the ones driving the deal flow, leading the due diligence, making the investment decisions, but along the way, the 90 are going to be participating. So after a year, they've been mentored, they've been trained, they've gone through like 20 due diligences, they have seen 6 to 8 actual investments. And, we're going to end the program with a Women Investor Summit back here in Boulder, Colorado, bringing the 99 from across the country. Actually, they come from across the world. We're actually doing the same exact program, or a similar program that we're launching in Europe at the same time. So we have 9 women angel investors from 9 different countries in Europe, bringing together 90 new and emerging angels from around Europe. But there's going to be some women that are investing in both the U.S. and the Europe funds and programs. And then we're also inviting about 5 women from Africa for the European fund and program, and 5 from Latin America to the U.S. program. With the hope that they'll be part of the 90 this time around, but then next year or in 2017, whenever we expand to Africa and Latin America, they'll be part of the 9 doing the mentoring and, leading the deal flow and due diligence in their own funds and their own programs. So we're hoping, these 2 first Rising Tide programs in the U.S. and Europe are just the beginning. With these 190 plus women, we hope to build bridges, build communication and relationships across the ocean, across the globe, and we're just getting started. So I think this is really going to move the needle on women's participation in angel investing.
Absolutely. And then you said about the 9 lead angels. So when you approach a program like this, how do you select those lead angels? What kind of qualities and criteria did you look for?
We looked for very experienced angels with track records of successful exits. In the U.S., one of the things we wanted was geographical diversity as well as sector expertise diversity. So we have 9 angels that are from around the country that have been doing this for many years. Most of them, or I guess all of them, are part of angel groups in their respective states, and they've been actively participating for many years, and they're interested in mentoring and giving back and building this community of women investors. In Europe, a lot of the 9 are actually on the board of the European Business Angel Network, so they've all been very active angels. They're now in the leadership in the Angel Association, and also are wanting to mentor a new and emerging group of women angel investors. So.
And how will the Rising Tide programs approach deal sourcing?
Well, the 9 are going to be in charge of bringing at least 4 investable opportunities to the investment committee. So, as I said, a lot of them are members of angel groups in their own states or their own countries. So I imagine a lot of the deal flow is going to come from the angel groups that they're members of. Certainly, we want a diversified portfolio, so we'll try to, invest in deals that are both geographically and have some sector differences as well.
Sure, and you said then that they should bring 4 that are investable. What do you think makes something investable? Is that something that's actually got a tangible product, something that's got significant revenue? What is it for you that makes it investable?
Well, we're going to be doing pretty early stage, so they're not necessarily going to have to have like revenues already. But in terms of investable deal, clearly it's got to be a great team, a great product, a great market, and obviously the potential at some point for either an acquisition or another type of exit. So. Yeah, I imagine we'll be doing pretty early stage investments in early stage companies. So.
And then on a more personal level, you recently moved to Boulder, Colorado from the Bay. How do you compare the two startup communities?
Well, I lived actually in Marin County, and Marin County is north of the Golden Gate Bridge.
Okay.
And it's very outdoorsy, gorgeous. I describe Boulder as a combination of Marin County and Silicon Valley, but only the good things of each. Boulder is a very livable city. It's very compact. You can bike everywhere. Everybody's into outdoors. We do our investment hikes and our meetings with entrepreneurs hiking. It's a very good work-life balance, and it's just an amazing community with a lot of energy. So, it's Marin is beautiful and wonderful, but it didn't have the same kind of entrepreneurial energy that Silicon Valley had. So it's a nice combination here, and it's a lot cheaper too. Property taxes are much lower here.
And we do always hear about SF having all the startups located there. Do you think that being in Boulder will maybe hinder your deal flow?
Not at all. In fact, most of my investments are actually local at this point, except for some of my online ones, which are kind of geographically dispersed. There's a lot of deal flow here. There's much more, I don't want to say saner valuations. It's a little crazy still in the Valley and in California. Valuations are really high, and there's a lot of investors. So here, I think there's great deal flow and much better valuations and lots of opportunities. So I don't think there's any problem here on the deal flow side.
And when investing, how do you approach evaluation of a startup's valuation? How do you evaluate whether it is a justified price?
Well, not well, actually. I'm definitely actually joining the 90 in both the U.S. and the European funds. I've definitely made a lot of mistakes in my angel investments, and I've except for this one deal I just did last week, I've promised I'm going to not do any other deals other than the 12 to 15 deals I do over the course of the next year with the U.S. and European funds. I've definitely made a lot of rookie mistakes, and I'm eager to learn from very experienced angels going forward. So,
what are those mistakes then? Do you think? Sorry to bring this up, and it's not. This is just me and you talking here. So what are those mistakes, and how do you think you're going to change?
Well, I'll give you two examples. One, when I was walking with Elizabeth one day on a hike, she said one of the rookie mistakes people always make is they invest immediately rather than looking at a bunch of deals first. So you gotta look at about 20 deals before you ever make an investment. And sure enough, that's great advice, and I wish I would have taken that. I invested. I was eager, right? So I made not a lot, but I made several investments before I really knew what I was doing, before I was really actively involved with the local angel group here, the Rockies Venture Club. And so I could have learned from doing some deals with an angel group first, and I didn't. I just went off and did them on my own. So definitely I would say look at a bunch of deals before you do your first investment, and also invest alongside an angel group to start, or like the Rising Tide program with experienced angels who are mentoring you along the way. Another big mistake I made was so I was talking to Joanne Miller, who's head of San Luis Obispo Angels and also part of Golden Seeds, and she said one of the mistakes that angels always make is they look at it from a consumer perspective. And that's exactly what I did in one of my first investments after I moved here to Boulder. And it was this amazing product. I'm like, oh my God, this has to come to market. And rather than, looking at it from the investor perspective and all the red flags I saw, I was like, oh yeah, let's do this. And so it was from a consumer perspective, wanting to see it in the market, then an investor perspective. Is this the right team? Is this the right, strategy? Is this going is this going to go forward? And, there were some flags, and my gut said don't do it, but I did it anyway. And had I looked at 20 deals here when I got to Boulder before jumping right in, I probably wouldn't have invested because of those because of those flags and from going from an investor perspective, not a consumer perspective. So, that said, it's a great product and I hope it gets to market. But as an investor, you need to look at it from an investor perspective.
In that case, though, with a great product, is that not enough, do you think, to be successful? Does it need to have all the different elements to make it the big success?
Well, I had some red flags on the team. There seemed to be some team tension, and that's what my gut picked up. And sure enough, after I invested, the team split up. So it's not just to have enough of the great product. It also needs a great team, or at least a great founder, but ideally co-founders, because it's one thing to run a small business or a medium business by yourself, but it's much better when you're looking at a high growth business potential opportunity to have a team, because you can't be all things to the company, and you're going to have and need skills that you don't have. And so building a team with complementary skill sets is incredibly important to making sure that you can scale the company.
And what level of engagement or interaction do you like to have with your startups? Do you like a weekly meeting, a monthly meeting? Do you like to be there every day? What sort of thing are you into?
I'm actually not that involved with any of my investment companies. I'm pretty happy with a monthly update. I would think down the road, when my career changes and I have more bandwidth, I would love to, be more involved with my portfolio companies. But right now, I'm pretty hands off, and it's more about providing advice or connections or support when they ask for it.
And if it's okay with you, we're going to dive into a quick fire round now. So, your favourite newsletter?
I'm going to have to say the policy dialogue on entrepreneurship that Kauffman puts out.
Okay, a good one. Your favourite productivity tool?
I think I'm most productive when I turn off the internet and don't answer my email. So can my tool be my off button for my internet?
Sure, yeah, absolutely. What sector is overhyped and what is underhyped?
Well, I would say it's just Silicon Valley is kind of overhyped right now. Underhyped, I'm going to say I'm really excited about companies that have plant-based alternatives to animal products such as Hampton Creek and Beyond Meat. I really think our food system is completely ripe for disruption, and sector are companies I'm looking at.
Your investing ethos in a sentence?
Invest in people and products.
What tools do you use to analyze startups? AngelList, Crunchbase?
Definitely, AngelList, CircleUp, WeFunder, some of the other equity crowdfunding platforms like Portfolio, and then I'm a member of the local Boulder Angel Group.
Do you think equity crowdfunding has the potential to replace VC funding?
I think they're complements, not substitutes.
And then most recent investment and why you said yes.
So I promised myself I would not make any more investments until after I finished the Rising Tide programs. But this really great opportunity came up here in Boulder called Entropy, and it's a CU professor and a PhD engineering student got together and started Entropy, which is going to be in cybersecurity. So it's building both a competent and skilled workforce to meet demands of the demand of companies that need skilled labor. And then also it's going to have an accelerator for startups in the cybersecurity space. I think this industry segment is very much ripe for huge growth over the next several years. And Colorado is well poised to be one of the geographic leaders in this space, and I just really like them. I really like the idea, and I'm really looking forward to their successful launch.
Well, Alicia, thank you so much for coming on Angel Insights. It's been an absolute pleasure having you on the show.
Oh, Harry, it's been great. It was my pleasure.
And to find the accompanying article for today's incredible episode with Alicia, head on over to Syndicate Room's website at www.syndicateroom.com and click the Learn page, which will take you to the educational platform. And do remember, when investing in early stage startups, your capital is at risk, so do engage in the proper due diligence before making an investment. And if you are enjoying the show, we would love to hear your thoughts on Twitter at SyndicateRoom, and we'd be so grateful if you could leave a review and subscribe on iTunes. But as always, thank you so much for your continued support, and we look so forward to seeing you in the next episode.